Good morning, team. So, a lot of fun and games in tech stocks overnight, and that saw a huge influx into the US dollar as everybody was buying ETFs and this stock, Vida, because AI is the king at the moment, and these guys are the king of AI. Um, they own, I think they own OpenGPT. Anyway, up 200 billion in one day. That's a lot of companies. Well, actually, it's more than the value of 472 stocks on the S&P 500. So fun and games. Everywhere else, the stocks did not perform. There are still concerns about the debt ceiling. There's chatter that it will be resolved on Tuesday, which leaves little wriggle room because on Thursday is the time when they'll run out of money. But still no agreement yet on the debt ceiling. So overnight we had the GDP numbers, which is a bit of improvement for the US. Otherwise, it was all just down to the stocks. So if we look at stocks, Nasdaq obviously outperformed, led by the bigger tech stocks, whilst the S&P 500 did not. It's pretty much just traded sideways and finished at the end of the day pretty much where it started. Um, bonds getting smashed, interest rates or interest rate yields increasing as that risk of a US default increases. Um, Gold got smashed as the US dollar strengthened. Oil also, and Russia declined to participate in the OPEC cuts. Uh, so more flow of oil. And then we come to the US dollar, which just rocking and rolling since was that May lows. It was put on 4,000 points or 400 points. So pretty good result there. Dollar yen got close to our target. Remember, we were targeting 140.35, which was a bit of a support resistance level. Got close to that, but faded off it. So you can lay out how close did it get? A couple of pips. So the high was 23, so 11 pips away from it. Not a bad target. So I would expect the yen to fade now. It's certainly overheated in the 4 hour and the daily. You'd expect it to sort of pull back maybe into the mid 139s um, to wear off that heat. Pound, where are we with the pound? Trading, tracking towards the target. Starting to get oversold, so that the US dollar rate is obviously the king at the moment. Cash is king, and the US dollar is overheated in multiple time frames and needs to have a pullback. Obviously, data dependent, but if the data doesn't, if the data's in line, then you'll get that pullback. Otherwise, stay long the US dollar. Euro broke through that support level. Clearly, that shouldn't be there. There's nothing there. It didn't even hesitate. I'd say that there's a bit of a zone in there. That'll be the support. 107 round number. Um, whilst the Aussie, because the commodity markets are just getting smashed, China isn't participating, or China's not the growth story that they were talking about 3 months ago, hasn't eventuated, and so China's disappointing, and the um, commodity markets are clearly weaker, and the Aussie dollar faded down to 65 cents, which is what we said it would do. And from there, I would expect it to maybe pull back into this zone here, um, around the mid 65s, before carrying on in that trend. And again, that's all about the US dollar taking some heat out of the currency before having another run. Fundamentally, the trend is matching, or the technicals are matching the fundamentals, but you just need some heat out of it. Otherwise, it's yeah, it'll it'll start to break. So on that note, trade accordingly. I wish you a happy and safe weekend, and we'll see you next week. Cheers.